What is platykurtic kurtosis? Have you ever wondered how traders assess the risk of extreme price movements in the stock market? One key concept that plays a significant role in this is kurtosis. Today, we will focus on platykurtic kurtosis and its implications for options trading and risk management. Kurtosis is a statistical measure that describes the shape of a distribution, particularly its tails. It helps traders understand how much data is concentrated around the average compared to the extremes. A higher kurtosis indicates more extreme values or outliers, while a lower kurtosis suggests fewer outliers. The normal distribution is often used as a reference point, having a kurtosis of 3, which is known as mesokurtic. Now, let's talk about platykurtic distributions. A platykurtic distribution has a kurtosis of less than 3. This means it has negative excess kurtosis, indicating that its tails are thinner compared to a normal distribution. As a result, platykurtic distributions are less likely to produce extreme events. One of the key features of platykurtic distributions is a flatter peak. This means that the data is more spread out around the average, with less clustering near the center. Additionally, these distributions have shorter and fatter tails. While the tails are shorter, the likelihood of experiencing extreme values is lower compared to leptokurtic distributions, which have higher kurtosis. For risk-averse investors, platykurtic distributions can be appealing. They present less risk of outliers, meaning that investors are less likely to encounter extreme gains or losses. In the context of stock trading and options, understanding these distributions can help manage risk effectively. For instance, assets that exhibit platykurtic distributions are less likely to experience wild price swings. This stability can be beneficial for traders who prioritize consistent performance over high-risk opportunities. However, it is essential to note that this stability might also lead to fewer chances for significant gains. When making investment decisions, traders should consider their risk tolerance and how the kurtosis characteristics of an asset align with their strategies. Platykurtic kurtosis provides a framework for assessing the likelihood of extreme events in financial markets, aiding traders in making informed choices about risk management. In summary, understanding platykurtic kurtosis is vital for anyone involved in options trading and risk management. It helps investors gauge the potential for extreme price movements, allowing them to navigate the stock market with greater confidence.